Houston Real Estate Radio. I'm your host, Shannon Register, and every week we bring you news and information you can use on your next real estate transaction. If you've got a real estate question, you can give us a call, 281-882-8088. We'll be happy to answer your real estate questions right here every Sunday. We've actually got some real estate questions that were called in that we're going to be answering later in the show today, 281-882-8088. Feel free to give us a call, and we'll answer your real estate questions. And always, you can go online to HoustonRealEstateRadio.com. Get lots of great information. We do video record every segment, so lots of information online for you as well. This segment here in the studio, we've got Patrick Jankowski. He is the Vice President of Research of the Greater Houston Partnership. Lots of information about what's going on in Houston. Welcome to the show, Patrick.
Thank you for having me, Shannon.
So really, the Greater Houston Partnership, tell us what you guys do.
We are, in the simplest sense to describe us, we're a community betterment organization. Our mission, we say, is to make Houston a better place to live, work, and build a business. And we go about that different ways. Part of our divisions, we go out and we try to recruit corporations to the region to make sure that the jobs continue to come here. We work, we have an advocacy division, and the advocacy goes out and we work in Austin, we work in Washington, we work at City Council to make sure that we have ordinances in place or funding is in place or we have the right business environment. We have a membership division because we are supported by our members, and we try to provide services to our members, networking events, how-to events, and put them in contact with our trade delegations that come into town.
And who are your members? What's your membership made of?
We have 2,000 members. They're as large as companies like Shell Oil and AT&T, and you get smaller companies like Cafe Adobe or Universal Technical Translation. It's people who want to be engaged in the community, want to see the community improve.
Very good. All right. And lots of great information over on your website at www.houston.org. Anything that you hear us talk about today, you can go over there to the website and click on the economy tab and get more information. So let's start with job growth. Lots of job growth. We've seen Houston just booming. Are we still number one?
Houston is doing very well. We're no longer number one.
No longer number one.
But we shouldn't feel bad about that. We've been number one for so long. We're still creating phenomenal number of jobs. Over the last 12 months, we've created 87,500 jobs. That's a 3.1% annual growth rate. If you look at the long-term trend for Houston, we tend to grow at about 2.4%, so we're still growing above trend. But it's hard to stay number one forever.
Yeah.
We're still, if you look at the top 20 metropolitan areas, we're the third fastest growing behind Dallas and Miami.
Okay.
So we're still up there in the top tier, and we're still growing very strongly. We're just not the lead anymore.
Okay, and more than 400,000 jobs since the recession? That's a lot.
Yeah, if you think about it, the recession ended for Houston in January 2010, and we've added jobs every month since then.
Wow.
The 400,000 jobs, to put that in perspective, we lost about 155,000 jobs in the recession. So you can see we're close to creating almost 3 jobs for every 1 job we lost in the recession. We're lucky that we had a fairly mild recession compared to the other metropolitan areas, and we came out of it very strong, as everyone can see.
What do you see are the strongest sectors that are growing in the economy as far as job growth?
Right now, obviously, oil and gas, and specifically the exploration jobs, the office jobs. Those are doing very well. We're seeing extremely strong growth in engineering. We've created such a phenomenal number of engineering jobs. The engineering sector is growing at a 10% annual rate, if you can imagine that.
So it's a good time to go to school to become an engineer.
Yes, very good time. Very good time to be it's a good time to be an engineer, a good time to be a nurse. It's a good time. One of the things we're working on in our organization is we're working on talent attraction and upskills, trying to make sure that people understand there's a lot of good jobs for that middle skills. You do not have to go to college to get a good degree to get a good job, but you do need to get some skills. And we have a need for
technical skills,
pipe fitters and welders and electricians and so forth.
Yeah, they make good money.
They make very good.
Can make good money doing that.
Yeah,
great.
You can get a 2-year degree from a community college and make $70,000 a year.
Yeah, I think that's pretty good. So the strongest sector is oil and gas. What are some of the weaker sectors that you're seeing that aren't growing aren't growing very well?
Construction is doing very well, but there's a subset inside construction which is struggling, and that's the category that's called heavy and civil engineering construction, and those are the jobs for building roadways and freeways.
And why is that?
We're simply not funding them. That's one of the things that Partnership's working on is try to get funding increased, but if you look at how much was spent on road construction, today versus road construction a year ago, we're spending about $300 million less.
And do you think that consumers don't see that because they see the Grand Parkway and all these road projects, so they just don't realize that? It's like we need the infrastructure fixed, though.
Yes, we need the infrastructure. I mean, this is something. How much time do you have to talk? We could talk about this, but in spite of some of the infrastructure challenges we have, we're still growing fairly well.
Yeah.
You said other sectors which aren't doing real well. There's a sector called department stores within retail, and a lot of that's what's happened with sales migrating online.
Right.
And a lot of it is just the department stores trying to operate as efficiently as possible. And we're still seeing the sector, the broad finance sector, mainly within banking and insurance. Because if you think about it, how much can you do online now that you used to be able to have to walk up to a teller?
Right.
Or how much can you do at your ATM that you used to walk up to a teller? And so part of that is the efficiencies with the technology, and part of it's also Dodd-Frank. So those are the sectors which they're not doing well in job growth.
You think all of our corner banks are going to go away here in the near future? We won't even need them anymore?
I don't know. It's interesting. You probably have more corner banks than you have corner gas stations, which is a big transition. So.
Yeah, definitely. All right, so let's talk about some of these key indicators. You have some different things that you look at. One of the things I know you talked about that you're looking at right now is PMI, and we're not talking about mortgage payments, PMI. No. So tell us what PMI is.
PMI stands for Purchasing Managers Index. Okay. It's a survey which is done once a month by the Institute for Supply Management. They call up and they talk to 80 to 100 different purchasing managers in the Houston region. Because if you think about it, purchasing managers on the front line for the company. They need to make sure enough stuff is coming in the shop so they continue to manufacture and put out their product for sale. Mm-hmm. They ask them questions about inventory. They ask them questions about employment, about sales, about production, about finished goods, about price inflation. You crunch the numbers, the PMI was above 59 in May, and it's dropped to 52.4 in June. That's a huge drop. It's a 6.8 point drop. What that says is that Houston, as long as it's above 50, Houston will continue to grow. So we're still above 50, but the fact that it went from 59 to 52.4 means it's going to be growing slower over the next 3 to 4 months.
So if it drops below 50, what does that indicate?
It suggests that 3 to 4 months down the road, the economy is going to contract.
So all those people that have been thinking about selling their house need to sell it this summer and not wait till next summer. Is that what you're telling me?
Should we get into discussion about market timing?
Let's talk about that. So I know you look at a lot of the stuff going on with real estate. And
yeah, it's interesting. You look at the different sectors. Office is doing very well right now. There's over 16 million square feet of office space under construction, which is really good, and 2/3 of that is pre-leased, which is good. And we're absorbing about 4 million square feet a year. So right now the office market seems to be in balance. Okay. If we start to see that 16 million square foot number rise, get to 18, 19, 20, that might be a sign that there's a little bit of overbuilding. But right now, at this point, office seems to be okay, but it's an area we need to be watching. Industrial and real estate development and retail seem to be doing okay. Housing, God, everybody knows housing is just going great guns. We're at 89,600 homes sold over the last 12 months. I keep on wondering, when does the number come out? 90,000, 90,000, 90,000. It's kind of like a high water mark for us.
And the median home price keeps going up.
Median home price, if you look at, let me shift a little bit, average sales price. So I went and looked at the MLS data last night. In 2010, in June of 2010, the average home through MLS was selling for about $220,000. Now it's selling for about $285,000. That's
big jump.
Huge jump over the last 4 years.
Yeah, that is a big jump. And, the home builders are not building a lot of homes less than that anymore. I mean, that's where their price point is that they're building.
Yeah, a bit of a concern. There's a concern there about whether we're going to have some affordability issues later on. Metro Study came out with a report just yesterday that talked about how the builders like to build for the move-up buyer more than for the starter home.
Yeah.
And so that's something we need to be watching as well.
And resale inventory is still tight, so it's sometimes hard to find that starter home.
We have 3,000 fewer listings today than we had this time last year. So yes, the market's tight.
Great information. The website to go to is houston.org. You can click on the economy tab and get lots more information. A lot of information going on this weekend here on Houston Real Estate Radio. Patrick Jankowski, he's the Vice President of Research at the Greater Houston Partnership. Thanks so much for coming in. We appreciate your time.
Thank you for having me.
Some great information about the market. I tell you, it's just so many things going on and happening in Houston. It's exciting.
Good time to be here.
All right, we'll be right back here on Houston Real Estate Radio.